Back viewers to news review. Sincere apologies for that interruption in transmission. Now, with me in studio is Respect Gwenze, our chief analyst. Now, Respect, you explaining the relevance of some of the questions that are actually being discussed in Parliament. And earlier, before we actually got cut off there, we were talking about how parliamentarians wanted to know if all the fundamentals were in place, and questions being asked as to whether this was a ripe time to actually introduce the Zimbabwean dollar once again. Your take.
Yeah, so the Minister of Finance is stuck to his point. His persuasion is that fundamentals are already in place. He believes that the surplus that was achieved in the period from January through to April in the first 4 months of the year is a sustainable measure. It's also an indicator of strength. That's according to him. And according to parliamentarians and some, there's obviously that persuasion that things are not yet in order, which I follow that persuasion as well. I do not believe that what was achieved in the first 4 months is quite reflective of the clear fundamentals that are on the ground. Anyway, the term fundamental itself, just because different people have got different yardsticks to measure fundamentals. But in my own view, fundamentals are a function of a trade surplus or trade gain. So if you're in a trade surplus position, to me it's also an indicator of an economy which is in the right direction. If you've also achieved a basic government surplus in terms of its fiscus, which is termed a fiscal surplus, I believe that that's also a good indicator of strengthening fundamentals. So in my own judgment, what was achieved in the first 4 months in terms of both trade and also on the fiscal side is something that cannot be sustained. Why? Because the first 4 months saw about 500 million in terms of surplus that was recorded, but at the same time we were sitting at some huge or growing debt levels. We also saw a cutback in terms of some infrastructure projects as well. We also saw a further depreciation in the local money value, which actually drove prices up, and consequently it also drove revenue up. But in real terms, there's been a pure decimation of value in the economy. So I think, to me, those are the critical factors which I believe are quite fundamental in terms of judging on whether fundamentals have been achieved, have improved. On the trade side, looking at what has happened in the first quarter, we're realizing that, of course, our import bill is going down due to suppression of some key imports such as electricity, petrol, and so forth. But I mean, these are key factors of production. Therefore, once they come off, or once you trim their importation, it also means that you are killing your production indirectly. So there's a lot of these cases where industry had to scale back, or had to scale back in terms of production, not just for the lack of factors of production, but for some other inputs that are necessary in the production processes. So all these are accumulating factors which will be truly reflected in the second half period, or even at full year, to really see the pure impact of the consequences of suppressing imports. At the same time, exports have not been growing at a very good pace. If you look at the key commodities that are exported in terms of tobacco and gold, they haven't been performing at the same level as last year. So that means a reduction in terms of what can be realized on the net in terms of production of these key minerals. So I think when you're looking at the aspect of fundamentals, of course it's debatable, but I'm sure deep down his heart, the minister really knows that fundamentals are not yet in position. The way we are experiencing runaway inflation, the way we are experiencing monetary instability, and the way industry is scaling back in terms of production are all key indicators of a lack of stability in terms of our fundamentals. So the minister's position really is that we are okay. We are sitting at a huge forex balance, which is about 1.2 billion.
Yes, of course, he did allude to that,
yes.
to that particular figure.
Yes, I think that shows you the potential, the economic potential Zimbabwe has in terms of growing even its own base of productive base. But I think also this is money that's due to private players in business, and therefore what really matters at the end of the day is whether these are able to trade sustainably in a progressive way. If they are able to produce more than they did last year, then we expect this variable to keep on improving. If they are facing challenges, or if they are skeptical of the environment, or if they are holding on higher nostro positions ahead of vostro positions, it actually means they will possibly be suppressing investment as we go forward due to high uncertainty levels. And all those factors, or all the impact of all these, it can only be truly reflected on an ongoing basis. You cannot simply say because at a certain time I achieved this, then that means that. Because what we are realizing now is an accumulation of funds that have been earned in years, in dollarization periods. And in dollarization periods, people could trade in a more normal way other than what they are now experiencing. So all these challenges, they bring about some economic some serious economic problems as well, which might actually affect the very stability that the minister proposed to have achieved in the first few months of the year.
Now, the central bank governor also explained the issue to do with interest rates. He said, we've increased the interest rates in line with inflation, but what we are aiming at achieving is we aim to curb inflation. And one of the things that he mentioned was prices are already starting to actually move southward. What is your take on that policy stance vis-a-vis what we're seeing playing out?
Typically, that response was quite necessary. I mean, in a period where inflation is very high, and you also have got rent seekers, I mean, those people who are taking advantage of these mismatches in the market, either on the red side or on the good side. So what you could do in the previous regime is that you could go borrow at an interest rate of 10%, and this is per annum, and you take say 30,000 from bank A, or maybe say it's CBZ. Once you take that money, you could go straight right away onto the black market, you buy money, and you start to arbitrage or take positions on forex. So you could be a big forex trader and even be able to raise money based on the fact that you are getting low interest rates elsewhere. So if they hike interest rates, what it means is that it reduces the appetite to borrow. So interest rates will soon go up to levels of about 30%, thereabout 30%. What it means is that it discourages me and you from borrowing. So it discourages speculative borrowing. But I don't believe that what has been driving inflation in this economy has been too much money in the sense of individuals having liquid positions. I believe that what we are facing, or what we were facing, is a function of government's own appetite for borrowing. And therefore, when you increase the interest rate for, this is what's called overnight lending between banks, that's the 50% threshold. So for individuals, me and you borrowing would be borrowing for something less. But then, effectively, this only affects a certain segment of the market, who are you and me. But it does not necessarily discourage government's own borrowing. Government borrows not based on the overnight lending rates. They issue TBs which they can price anyhow. So I don't really believe that this measure is meant to cushion money supply growth, which is stimulated by individual demand, but rather it stops arbitrage trading of the US dollar by people who will be getting money at a cheaper cost and even playing it elsewhere, because there are those gaps in the market. But I tend to concur that in basic economics, once you increase the interest rates, you discourage people from borrowing. But who was the borrower in this case? It was government, not individuals. Individuals are borrowing at least 3 billion, have borrowed at least 3 billion over the past year. Government's own borrowings are running over 8 billion or so over the past 4 years. So I think that's a big cause for concern.
I realize. Now, very quickly, just to talk about how the minister said, look, if at all we have to think about the Rand Monetary Union, that's a complicated process, 2-3 year process, but there seems to be a backtrack to what the minister had said earlier. Your comment?
I'm not too much of a monetary. I'm not a monetary economist. I don't really believe in prospecting against currencies. I actually believe that the local currency can work if fundamentals are okay. So I'm indifferent about the currency that we might take. Some prefer stronger currencies, some weaker currencies. I'm indifferent about that. I think my persuasion is that as long as you can keep your fundamentals in position, as long as your macro side is supported by the monetary side, and there is a cohesion and there is a relationship between the two, they can definitely be a positive result. Whether we join the rand or we pursue another currency, I've never put my mind deep into focusing on that, but rather looking at the structure of the economy, how much our productive base is. How our productive base is quite fragile and so forth. It tends to dictate the nature of or the kind of currency that we should have. So of course, yes, our currency should not be very strong, but rather there should be stability whichever way we go, and all other things follow against that.
I realize. Now let's talk about Econet. They just released their results. Revenue scaling 37% to 1.1 billion Zimbabwean dollars. Profit after tax declining 20% to $106 million for the full year, of course, 28 February 2019. What is your comment where these results are concerned?
Econet is actually one of the biggest companies in Zimbabwe. Before its demerger, it used to be 3 times bigger than the second company in terms of market capitalization, which was Delta. So they are a market leader in their space. If you're looking at the space to do with money transfers, they've got an over 80% market share, voice. They have a substantial about 65% market share thereabout. And so basically they are leaders in their space. In November of last year, the board of directors, they approved a demerger of the Econet Zimbabwe or Econet Wireless Zimbabwe company, and they emerged a fintech driven company, which we now know as Cassava. But basically Cassava brings together the insurance side, EcoSure, in some of those operations on the insurance side. It also brings on board a digital bank, which is Steward Bank, and it also brings in EcoCash, among other investments. So from an Econet's perspective, the key driver of revenue was voice. Voice has re-emerged as a key driver of the overall groups. The overall Econet's performance. It accounted for over 57% in terms of contribution, but the second in position was data. But rather, data is growing at a far much faster pace. If you look at the number of people who are utilizing Econet data, they're now sitting at close to 10 million. We were just a 16 million economy in terms of numbers, but the number of users are about 9 point something million, and we're looking at the adult population in Zimbabwe that's almost close to about 70-80% thereabout. So there is a huge penetration. There's a huge market presence and market dominance. The decline in terms of profit after tax, it's mainly a result of exchange losses. The company recognized that from a certain point in 2018, which I think it's about October thereabout, there was still a 1:1 exchange rate in Zim. So they assumed that if we were to say these earnings were not in real dollars, what does it mean? It means all other income that we earned after a certain point, we have to discount it by a certain exchange rate. And eventually or ultimately they came out with a lower profit after tax. So that's simply a provision. That's simply more of a provision.
Okay, now on to Cassava Smart Tech. This is a brand new development. I mean, a lot of innovative products and services that they've actually got lined up, and their revenue of $173 million. Profit after tax standing at $9.6 million. What is your comment where their performance is concerned? As well, since it is a fresh company, what can we look forward to going forward, given this is where you have Stewart Bank, this is where you have EcoCash?
Yeah, so their mandate is quite clear. They say we are here to provide tech solutions in different spheres of either business or individuals' lives. And so I think as where they are sitting at right now, they're predominantly driven by EcoCash and Stewart Bank. These two are quite key in terms of obviously pushing through the payments. And also, if you're looking at the volume of transactions that were driven by both parties, both EcoCash and Stewart, they're quite high, and they leveraged on the cashless society that Zim has now become.
Of course.
But going forward, I think Cassava will roll out newer products, and those fresh products will mainly be obviously tech driven. So there's quite some huge growth prospects when you're looking at a company like Cassava.
Talking about EcoCash, there's been a bit of competition. I mean, I've seen other players like GetBucks and the like were also trying to harness something out of that space. Would that perhaps not affect the performance of EcoCash?
Yeah, at the end of the day, customers want seamless services. They want services, or they want a portal where they know that they can actually enjoy different kind of services, be it insurance, be it money transfer, be it bank. That gives Cassava more of an advantage. But for banking corporations, it's also easier to lock your clients within your service platform if you have got a different number of products that are quite interlinked. And some of these players have come up with products that also try to tap into the value that has been that was being taken by Cassava.
Well, thank you, Respect, for the perspectives. Thank you, guys, for staying with us. Up next is a look at the stock markets. Please stay tuned.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chimbumu. Joining me today is Respect Gwenzi. Good evening, Respect. How are you doing today?
I'm doing just good, and you, Anis?
I'm all right, thank you. Sure. Well, seems to be a very gloomy day today. Collingmore passing on very sad news for the business environment there. One of the CEs who actually pioneered a very good initiative in terms
Africa
of
and the world.
Yes, in terms of mobile money and the like. Very good turnout for M-Pesa there and Safaricom.
Yeah, quite a leader in their space, and obviously he'll be missed. I think he has been an innovator, and it's something that he'll be remembered for by Africa and the rest of the world, indeed.
Yeah. Anyway, continuing on the gloomy news.
Sure.
The stock market has pretty much culminated to a 5-day trend of losses, now coming off 5.17% today. On the all-share index, 5.23%. On the industrial index, settling at 647.79 points. Minus index was stable, but top 10 index in the same fashion has come off on a larger chunk, coming down 6.82%. Now, Econet has come off 7.48%, settling at 169.77 cents. These guys did report a 37% incline in their revenues, breaching the $1 billion mark. But they did suffer a very huge exchange rate loss there, amounting to about 250 million there. But year-to-date gains for them have slimmed down to 18.93%. Pretty much bringing them almost 30 cents far from their year opening price of 142.73 cents. What's your take around Econet valuation?
I think in terms of the stock market trading, it's quite reflective of what's happening elsewhere. Investors are now getting more and more consumed with what happened on the monetary side. There's been a bit of stability, especially on the interbank market. We have seen trades recovering, and that has obviously ignited a new sense of hope in the local currency. And against that, the stock market is actually coming off. Why? Because much of the gains were hedging against a declining value in the local currency. So I think the market is simply picking up, but we are still in a shock. And obviously, if you are realizing losses of about 5%, these are quite huge, so they quite reflect what investors are now believing to be the new trend. But it also speaks to a positive vibe against our local currency. So this is it for the broader market, and we're looking at Econet's performance in terms of their financial year. Quite some huge growth, but much of it emanated from an increase in voice revenue. We saw lately tariffs being adjusted. We also saw in the prior year there was really a big movement in terms of data consumption and data prices as well. So all those contributed to the growth in their revenue. And even the demerged operations under Cassava, they also quite outperformed. But it's been a sad day for Cassava, incurring a double-digit loss in today's session. So broadly, I think it remains a very strong company as an Econet in terms of their fundamentals as a company. And I believe that once all this noise is gone, they are going to retrace in a certain direction, which is obviously positive.
Yes, you did also touch on Cassava. They did also release their financial results. Now, just to zoom in a little bit more on one of the operations, much to do with EcoCash, which is almost pretty much linked to Stuart Bank there. where do you think financial inclusion is really going to be taking them? Are they going to be hitting the ceiling very, very soon? Especially considering that they do service, in terms of EcoCash, they do service about 9.8 million subscribers on that platform, which is almost 90% of the adult population of
I
Zimbabwe.
don't think that's the game for cassava. The game really is in terms of technology. It's not just a game of financial inclusion. With financial inclusion, you can hit the ceiling, maybe even 100% of the adult population. But what's important is that can you retain those customers within the same circle of your services? And this is where cassava now comes in to say we can hook you up with your cab that is, through Via. But you'll be using your mobile phone to pay for service A. You buy your you possibly buy your insurance service using EcoCash, or you are a farmer, you need advice. So I think the game really is on how they can turn technology into developing products that are quite relevant within the ecosystem of their ready customers. So despite hitting a ceiling in terms of the adult population that can consume their products in Zimbabwe, at the end of the day, it's about retaining those by giving them some seamless value through technology-driven products.
Okay. Top 10 index is down 18.81%. It was at 226.35 points last Tuesday, just after the announcement, much to do with the whole new monetary system that the government is introducing. All-share index is down 15.74, mining's index down 12.43%. Now, a total of 21 counters did exchange hands today, but as a result of that, we still suffered a decline in terms of volumes traded from 9 million to 6 million shares traded on the stock exchange. Of those 21 counters,
Only
2 were
two
rises
were up.
and 15 were laggards. Now, turnover was down 17.27%, selling at 9.1 cents on in that regard. Now, just quickly into our forex market, there, the interbank has weakened at a faster rate today, coming off about 10.2%. Now, still my worry, as I mentioned last week, is that the ask price seems to be going up faster than the bid price. Today, the ask price was up about 10%, and the bid price was only up about 7.9%, almost 8% there. So is it still translating the fact that these guys, this rate is trying to speed itself up, coming to merge with the parallel market, or there is surely a lack of supply there?
If you recall my prediction last week, I said the interbank rate should rise to 4. There is need to clear the existing demand, so the price should be let loose. It should go maybe even beyond the parallel market rate.
Okay.
But it will have to come down once you have cleared the demand, which has been overhanging for quite a long time. The governor today said 525 million has been exchanged hands. Just a week ago, we were told by an official at the Reserve Bank that only 155 million has exchanged hands. So that gives you an estimate of just about 300 million that has exchanged hands over the past 5 days. And that's big money. If you divide that in 5 days, you get about 60 million in a single session. And that's really serious money that's trading hands, if it's true. So I think this is normal. The rate has to go up. But what happens is when all the demand is cleared,
It's going to come off.
then there is no one to demand those huge monies. And there are sellers who want to spin their cash so that they can capitalize their operation, or they can pay their salaries local. What does it mean? They are forced to sell. And there's also a 30-day moratorium in there. So all that simply pushes suppliers to start to lower their ask price. Okay. So it's quite normal what's happening. The rate, I had expected it to go even beyond 10 in the first instance. but that has to happen before we can normalize. But it's a function of supply. But I think it's encouraging now that the governor says that money is exchanged hands.
All right. Well, it seems as if demand needs to be cleared first for us